Well, I mean, any cut was going to be a mistake. I think the Fed caved into the pressure of market expectations and cut 50 when they probably were set to do 25 a week or two ago. But I think they changed their minds. But look, the market is delivering a verdict here. Interest rates are rising. They're not falling. Long-term interest rates are going up. And I think the Fed rate cut marks the low in long-term Treasury yields and mortgage yields. So I think you're going to start to see rising interest rates as the Fed cuts rates. And so you're not going to get the benefit that you might assume. You're going to get an increase in consumer prices. Depending on what rate you get over prime, rates are headed up. Credit card rates are going up. They're at record highs and they're going higher because defaults are rising. And the inflation is not dead and buried like Powell claims. It's about to come back for a whole new lease on life. In fact, it never really got close to 2%. The Fed is playing around with numbers. And I think we're already in a recession. It's not about how strong the economy is. I mean, that was just all a bunch of talk because he's trying to talk up the economy because he's trying to help out Harris and try to, continue this false narrative that we have a strong economy. We have a weak economy. The only thing that's strong is inflation, and people are about to see how much stronger it's about to get now that the Fed is throwing gasoline on the fire. Well, look, if Powell cared about inflation, he never would have cut interest rates to zero in the first place or left them there as long as he did. He wouldn't have done all this quantitative easing. Inflation is the Fed's tool. That's the only tool they actually have in their chest for trying to artificially stimulate the economy. Powell said that the Fed's job is to support the economy. That's not the Fed's job. Unfortunately, that's what Powell thinks is his job, and he thinks the way you support the economy is by creating inflation. Well, the problem is he created way too much inflation, and now inflation is the problem, and now he's trying to solve that problem with more inflation. And, Powell indicated that for a while he could keep doing quantitative tightening while they're cutting interest rates. Well, I think by Q1 of next year, the Fed is going to be back to quantitative easing because the rate cuts are not going to stop the recession, and they're going to result in higher long-term interest rates. And then the Fed is going to try in a panic to reduce long-term interest rates by going back to quantitative easing. And that's just going to increase the pain because it's going to send the dollar through the floor, gold and other commodity prices through the roof. And consumers are not only going to be dealing with a loss of jobs, but much higher prices when they go to the supermarket or any place else that they try to spend their rapidly depreciating dollars.
What's happening? Welcome back to the channel. Aaron here from Bitcoin Bros. And that was Peter Schiff talking about inflation coming back to the United States, similar or even worse than what we saw in 2023. And Peter's basically saying inflation is going to go back up. It's going to cause everything else to go down. The stock market's going to go down. Bitcoin is going to go down. All of these risk assets are going to go down. And you should buy gold because gold is the safe haven in times of inflation. That is what Peter has been saying. And the Bitcoin Bros obviously disagree. I do want to check out a couple of charts here in a second, but let me know what you guys think. We think inflation is going to be going away. We're going to look at some charts here. Let me know what you guys think in the comment section below, but I do want to start off just by looking at this chart. I thought it was really interesting. It shows you what actually inflates over the past 20 years, what categories. Hospital services up here at number one. You have college tuition and fees, college textbooks, medical care services, and then some things that don't really move. New cars, household furnishings, clothing, TVs have depreciated, computer software has depreciated, cell phone services have depreciated. Just really interesting there to see some things don't inflate as other things are inflating. So just pretty interesting there. But this is the 12% year over year CPI numbers here. Obviously, just this past month, we got that 2.5% year over year reading for CPI, which was really good to see from the tops that we saw back in 2022 that were around 9.1%. Now it's coming down and it doesn't look like the trend is changing. And if you look at something like Trueflation, which aggregates a whole bunch of data and centralizes it to get this number, you can see Trueflation actually had inflation peaking out at 11.4% back in 2022, 2% higher than the 9.1% that was coming from CPI. And right now it's currently sitting at around 1.41%. So it's down a whole percentage from the 2.5% reading that we got earlier. And something's really interesting about true inflation. this is actually kind of a leading indicator for where inflation has been going. As true inflation has gone down, we saw actual CPI inflation go down along with it. And just because that has been a trend does not mean that is going to continue. But you can definitely see here, since May, we have seen on true inflation really starting to trend down. So Peter's saying inflation could come back. In our personal opinion, doesn't look like that is going to happen. And also, if you look at one of the biggest things that is keeping inflation up to this 2.5% level is housing. Housing is still coming in very hot on the year-over-year number, and it's around a third of the factor of that 2.5% number. So when we look at housing, it's still elevated. But when you look at U.S. rents on anything like Redfin, on Zillow, or on apartment lists, all rents are coming down. But for some reason, the CPI data has really lagging data, and it hasn't got into that CPI rental number yet. And once that comes, we could really see inflation start to drop very quickly. If we start to see inflation come down to a 0.2 month-over-month change, which is 2.4% annualized, that CPI of 2.5% could actually go below 2%, which would cause the Federal Reserve to want to cut rates even faster because they don't want to see anything lower than 2%. 2% is their goal. They don't want to see continued deflation. They don't like that. So Peter thinks inflation is coming. We would definitely disagree. But let's go ahead and see how Peter thinks this is going to affect Bitcoin, crypto, and the whole market. Let's go ahead and check that out here.
Of what the Fed did to raise the inflation rate to 2%, that it ultimately went so much higher than 2%. And it's why it's never going back down to 2% in the foreseeable future. It did have an effect. We're dealing with the effect now. It's just that there was a lag, right? It took a lot longer, and part of it was hidden by a CPI that understates by design the degree to which prices were going up. So all the years that the Fed claimed that prices were going up less than 2%, they actually were going up more. It's just that the government numbers didn't reflect that. But getting back to so the markets don't get this. So they don't realize that they need an inflation hedge because they don't think there's any inflation to hedge. They trust the Fed. They think the Fed is going to take care of the problem. The Fed is not going to take care of the problem. The Fed created the problem, and it's going to make the problem worse. And so they should be buying gold, and eventually they will be buying gold. Now, whether some people buy Bitcoin instead of gold or in addition to gold, who knows, right? Some people might decide to do that, and that might push the price of Bitcoin up. I don't know. But even if it goes up, it won't stay up. Eventually, it's going to collapse. So whether it has another rally before that collapse is anybody's guess.
And thank you for watching all the way to the end of the clip. If you haven't already, make sure to hit that like button if you found any value. Subscribe for more videos. Let me know what you guys thought about what Peter Schiff had to say in today's video. Put that in the comment section below. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.